Proper risk management. US dollar versus the Singapore dollar. Lot size, stop loss, take profit, points, and margin. Now, to apply proper risk management, you have to understand the value of the points. You can see here we have TP 10.43 US dollar, which is the profit that we expect to take on this trade, which is a buy 0.01. We set a stop loss at 3.14 US dollar, 408 points. The feature or the section here, we have chart, we have trade, and this is the feature that we're using for setting the stop loss and take profit using BozzaTrader 5. There are other platforms out there that you can use to set your stop loss and take profit. And for some of you who don't understand how to actually calculate this number of value and also the lot size, we have a tutorial in this channel. Please check it out, and so that you can actually learn more. Now, in applying proper risk management, we have to always have a stop loss price and a take profit price. Doesn't matter whether you are trading without a stop loss or with a stop loss, but the stop loss must be there, because whenever we're risking, a broker will not allow you to actually just trade in that way. That you trade without a stop loss. You'll be trading without a stop loss even though you don't have a stop loss, because we have what we call a margin level, which is a monitoring tool that the broker sets to close your trades automatically if they go to a loss. Now, to apply proper risk management, the first thing is understanding the points value. The point value are simple. The points value are based on the lot size. The more we add a lot size here, the more the money will be added as a profit, and the more the money will be added as a loss where we set a loss. Now, you can trade using your phone to go to section trades, or you can just go to any assets and that you like of your choice. Let's say in this case, we're using the US dollar versus the Singapore dollar, or we can choose a different asset or use the euro versus the Great British Pound, and go to a chart whereby we'll be able to make a buy or sell. But if let's try it right now, we make a buy of 0.01 with a lot size 0.01. Now we change the lot size to 0.50. The risk will not be the same. If right now we make another buy, we have an error of not enough money because of this issue here. We have less money. So let's try it right now. We use 0.05. Now 0.05 is bigger than 0.01 because we have 0.01 in this 0.05 lot size, which means if right now we tap on here, we use this feature as an SL to, let's just go back, we tap on this vertical line on this 0.01, not vertical line, horizontal line, sorry, we tap on this feature over here, you'll be able to see the stop loss. Let's just move it down here. You'll be able to see the stop loss. Now you times this by 5 times. You times this by 5 times because this is the amount of money that will be risking in number of points. Now, I trust you to understand how to use this feature. On BozzaTrader 5, it will be much challenging to, or BozzaTrader 4, not BozzaTrader 5, it will be much challenging to actually use that feature because you will need to use a certain price to actually set a stop loss. So now, number 2 is setting your stop loss. Let's actually do this together because I want you to understand something that is way important. Lot size, this is the lot size that we have, 0.01, and if right now on 0.01, our risk here you can see is $3.14 because I want us to do something that is practical. Given that we are having a balance, this is the balance, this is the money that we deposit in the broker, or we deposited in the broker, and I want to talk about something that is way important here, which is margin. Some of you do not know margin very well. Margin is the money that the broker needs, and it does not mean that when we place a trade of 0.01 2 times here, we can be able to risk this margin. Margin is the money that is needed, and it's money that is not meant to be lost. Are we together? It's money that is not meant to be lost. So meaning that even right now we go to a loss. Let me bring another example for you to see so that you can actually have a better view. check here, we open trades here on actually synthetic indexes, right? When we look at the margin here, it's a red. We have 3.46 red. This red on margin simply means that we are now losing money on equity. If you can check here on free margin, let me make this clear for you. Stay with me, please stick with me so that you can understand how to set proper risk management, risking your money, because we can do this the easy way or we can do this the hard way, but the hard way is this way, but we'll go to the easy way after this one. Now, balance, we have 5.57 US dollars because the account is in US dollars. Equity is the money that is minus or plus because of right now, if we check right now, we are losing. So we minus the 2.89 on the 5.77 and we're left with 2.88, which is the equity that we have. Then when we open a trade, immediately when you open a trade, you will need a margin, which is the money that will be minus from the balance, not equity, from the balance. But the equity will affect what? Will affect the free margin, given that we are actually in profit or in a loss. Now, on free margin, we have a 0.58. Why we have a 0.58? When we look at the calculations of margin here, 3.46, we are now left with 2.88. This 2.88 is a temporal balance that we're supposed to have here. It's a temporal balance that we're supposed to have here. So, given that we have 3.46, now we minus this 3.46 from the 2.88 because we are losing. We no longer have the 5 as an initial balance or as the balance that we deposited in the broker. We no longer have it because of the equity is floating in a loss. That is why we have 0.58. Now, margin level is a monitoring tool. This monitoring tool is set at 50 as percentage form, that if we lose 50%, on equity or margin, we are not supposed to lose this amount of money, that is 3.46. If right now we have 5 here, because right now we are already left with 2.88. Some of you might be confused, some of you might understand it, but stay with me so that you get to understand what's happening here, so that you can actually work around this. But I will just show you the easy way for you to do this without any issue. I'm just referring so that you can be able to understand if you have less money and you're trying to trade and you're trying to risk well. When we look at the margin here, broker will set a margin level to 50%. Some of them, they set it 70%, depending on the broker that you're using. And for you to use the brokers that I'm using, you can actually use the links that I provided in the description below or in the comment section below. If you're watching this video on other social media networks, such as the TikTok, you'll find the link in the bio. The brokers that I recommend and are best for you to use. And why you should use them? When we're trading this asset, they have spread. So some of the brokers, they offer better spread. So these are the brokers that I provide for you to actually use and be able to not be stopped out when we're trading. Let's say right now you set a stop loss in a certain price. Let's say you set a stop loss here, and this blue or red and blue line or green line will actually stop you out because of the spread. The spread, if right now it gets here, it will just wipe you and you'll be actually in a loss. Remember, you are paying the spread and whenever you buy or sell. So now, looking at these calculations over here, what you must note, or let's actually continue to understand some of the things that I actually didn't explain here as margin level goes. Margin level works with what we call a margin call and a stop out level. So this margin level stands for margin call and margin stop out level. Stop out level is actually an endpoint whereby if you reach, say, 50%, you will actually automatically close these trades. And if you reach 100% here, you'll get a margin call, which you get an email, a notification that you need to actually at least add more balance so that you can actually keep your account alive. You'll receive a notification by the app, right? Now, when we look at here, we are left with only $2.88. Our trades here is losing 2. This one is profiting, which is giving us a boost to cover these losses. This one is loss, this one is loss. So let's say, in this case, if right now we were to risk $2, $2, $2, $2, $2 per trade, given that we understand the number of points. Remember the number of points that I've explained to you? You remember that? Yes, and that works with what? The lot size. Now, you might be confused, Bozza. I see the lot size here is 0.50, 0.50. What's happening here? asset to asset, they have different lot sizes, and that is important for you to understand. Now, margin is highly influenced by the leverage. It's highly influenced by the leverage. Some of you might not understand what is leverage and what's happening here, Bozza, with the leverage. Sometimes it's actually something that is actually difficult to understand. This is my real account, and this is the broker that I'm using for you to actually register an account. Here I have a margin, I have a leverage of 1:1000, and the currency that I'm using is GBP. And GBP is the best currency for me to trade the asset that I actually must trade for, especially in this case, I trade gold. Now, I have a $25 account over here. So, my risk is in this way. Here, I risk 2, 2, 2, 2, 2, 2, 2. So, we can do the calculations together and say 2, 4, 6, 8, 10, 12, 14. Which means on the 25 here, I'm risking only £14. Are we together? I'm risking only £14. Now, if you minus the 14, because some of you are actually, I don't know, maybe you don't understand or maybe you do understand, but let's actually do together the calculations and say 25 minus the 14, which means I'll be left with 11. And on 11, if I divide it by 2, which means I have only 5 chances of opening trades of 0.01. And we can just convert them to 6, but then I have only 5 that I can just use to risk. I'm not gonna be affected by what? By the margin level, because basically that's how I trade, and this is what I'm sharing with you so that you get to understand much better. But maybe you might say, Bozza, this is actually much confusing to me. Give me the easy way. Then I'll give you the easy way. It's simple. The first thing that you do is make sure that you have more money here. If right now, instead, in this case, we are risking $2 per trade. Let's just use this example. We are risking $2 per trade. All right. We have 24 is pound. We have 25 pound, which means I have how many chances in this 25? We say 25 divided by the 2, which means I have equals to 12 chances. And why do I actually risk the 2, and how do I determine the 2? I determine the 2 based on what? Based on that I'm using a lower time frame. Now, whenever we trade, we must use a lower time frame from 30 minutes to 1 minute. Why 30 minutes to 1 minute? We use 30 minutes to 1 minute to actually lower the risk in the number of points, so that if right now we go to, in this case, you can see this is H12, or you can actually trade in maybe, let's say, 4 hours, 1 hour daily. Whenever we trade on these assets, you must make sure that you're using a lower time frame to get in an interest so that you can actually risk less money. Are we together? And then when we use the time frame, we're now triggered to use what? To use the candlesticks. And when we use the candlesticks, when we mark our structure, whereby we want to, maybe let's say we want to place a stop loss here below the area of a demand area. Some of you might not know demand or might not know supply. We have another tutorial on this channel. This is actually our area of demand, all right, for us to actually take a buy, and which is indeed we managed to take a buy. Now, if we look over here, this is actually the asset that is actually moving as it is actually going to a buy. And some of you might be asking, Bozza, you have a buy, but at the same time you have a sell. Yes, I have a sell because I wanted to make a demonstration to you. I can close this sell, I'll close the losing trades by just coming to this option, and then I'll be left with only the profitable trades, and then I'll let that trade run. But for me to explain it much better to you, I needed to do that. Anyway, we are here. Some of you will be actually exposed to setting stop loss below a demand area, which is actually something that is bad. But you can use what we call indicators to set a stop loss. You can go to section chart. We've touched a lot of things in this video, which is some of you might get it, some of you might not get it. And you just come to this icon over here on the top. If you're using an iPhone, you will use a different feature, but then that is not an issue for you to do so, because I've got you covered in that case, and I wanted to share with you so that you get to understand what you needed to do. All right, let me see. Anyway, right, let's continue. So right now, if you're using a demand area to set a stop loss, please don't do that. You can use an indicator. What indicators can you use? Bozza, you can use this indicator, Ichimoku, and what you just like that, you go back and you'll see this, which means whereby you set a stop loss, you set a stop loss below a cloud. Below a cloud, you can see here, this is where your stop loss must go. If you tap here, you'll see this icon. We tap here, and when you tap here, you'll see how much money you are losing in number of points. You can see we are risking only $0.41, given that we're using 31 points. If right now we times this 31 points with the 0.01, we'll get this $0.41 US. Given that we're using a base currency that is actually in a US dollar. If it's in a GBP or in euro, you will need to convert that. But then, just to make this short, please, when you're risking, make sure that you're risking 2, 2, 2, 3, 3, 3, and make sure that you get out of a trade if right now it goes against you. You don't actually try to hold the trade for a longer period of time. So with that all being said, I love you all. Stay blessed.